enviable, especially for macro. Obviously, you're not in the macro space. You're doing very specific trades. What was the best trade that you did last year that is closed out that helped log that 16%?
Yeah, I think that our most profitable trade last year was a company called TPC Group. It's a middle market company that makes a chemical called butadiene that goes into manufacturing of rubber for tires. We restructured this company out of bankruptcy in 2005, so we know it really well. And we bought into the reorg equity at about $26. It so happened that the management agreed to a management buyout with two sponsors, SK Capital and First Reserve, at $40 in August last year. And us being one of the biggest shareholders, we're not very happy with it. We felt, frankly, that it was a sweetheart deal for the management. At $40, I mean, that would have been a 50% IRR for the sponsors. So we bought more stock. We filed a 13D on the company. We owned 7%, biggest shareholders, and told the management to properly run the process and shop the company to the highest bidder. We knew there were multiple strategic buyers that were interested, as well as other LBO buyers, and it so ended up with Blackstone topping the management with a $45 offer. The management came in and matched that, and we ended up getting 45, so we made a 70% gain on this. It was one of our best.
Yeah, 70% is a pretty good, clear gain. How do you come up with the ideas? I mean, obviously, what you do requires specialized knowledge. You have to know the company really well. As you said, you were already starting out as a majority shareholder. So you have information that is difficult, let's say, to replicate unless you're actually in your shoes. But where do you get the ideas? How do you know that something like this is going to be worth it, or at least how do you make that bet that it will be?
Yeah, I'd say that we have a tremendous screening process in our firm, and we screen just about every potential company that has underperformed, and oftentimes you find great opportunities when managements are underperforming. We also screen for certain events, meaning companies that have assets that can be divested, that are about to be divested, in order to maximize values. So it's purely a screening process. We have a lot of technology.
With the screening, Tom, I was just going to say, are they algorithms that you've built, or are they actually people?
They're people. It's our research team that does a fantastic job at really monitoring everything that goes on within our event space.
All right, so that was at least one rockstar trade from last year. What are you building this year?
This year, CompuWare is one of our more interesting situations. It's an IT solutions company, $2.5 billion market cap. They have several unrelated businesses, and this seemed to me to be very, very undervalued. They ended up missing their third quarterly earnings last year because of mismanagement in Europe. The stock dropped from $11.5 to $8. We started buying it at $8. It was purely the management that didn't do a good job in Europe. They replaced the chief executive there, and we felt the values were more like $16. They have one part called Covisint that is the most fast-growing part of the business. Is a customer interaction business for customers to interact between the whole value chain. Very fast-growing. The management has talked for years about spinning this out to shareholders, and we felt, what are they waiting for? They're taking just a lot of time here, and they're underperforming with a stock at 8.5. So here we're one of the big shareholders. We ended up having conversations with the management about how to realize the values, and they also had underperformed their peer group by 26% over the past several years, which is not a great track record. So we felt it was a great opportunity here to go in and proactively have communications with the management. We did send out a white paper encouraging them to go ahead with the spin-out of Covisint and, frankly, divest certain assets and perhaps break up parts of the business. We feel the company is worth $16, and here we ended up with Elliott coming in with a hostile takeover bid at $11 in a leveraged buyout proposal. We know there are multiple other LBO parties interested in this. We know there are many strategic buyers interested in both the entire company as well as the assets. So stay tuned. I think there's more to come. I think there's a lot of upside in this deal.
Tom, we wish you luck. Thank you very much for sharing some of the insight, perspective, the way you make decisions. Tom Sandell joining us there, founder and CEO of Sandell Asset Management. When we come back, several top tech CEOs get their